welcome to The Explainer. Today, we're jumping right in to break down the absolutely unprecedented, world-shaking surge in gold and silver prices that has completely taken over the start of 2026. So, on January 26, 2026, gold didn't just break a record. No, it completely smashed through a huge psychological barrier, soaring past $5,000 an ounce. Now, this wasn't just a number, you have to understand. It was a massive signal of some really deep unease in the global financial system. So what in the world is driving this historic rally? Okay, let's dive into this. Here's how we're going to tackle it. We'll start by putting this whole moment in its historical context. Then we'll unpack this perfect storm of geopolitical and economic drivers. After that, we're going to look at silver's totally unique story. And then, finally, we'll ask the big question, is this just a temporary bubble, or is this the beginning of a whole new reality for money itself? First up, to really get a handle on the scale of what's happening right now, we need to understand just how significant this moment is compared to the gold bull markets of the past. You see, previous peaks were always tied to specific, identifiable crises. Back in 1980, it was stagflation, that awful mix of high inflation and zero growth, plus the Iran hostage crisis. In 2011, it was all about fears of a U.S. debt default. And in 2020, of course, the global shock of the pandemic. But what we're seeing today, it just feels different. It seems to reflect something much, much broader, a whole combination of global anxieties that might not be just another peak, but a real paradigm shift. So let's get into the first major driver here. This geopolitical storm that's causing investors everywhere to just run for the safety of hard assets. The start of 2026 has been defined by what a lot of analysts are calling Trump turmoil. I mean, from a dramatic showdown with European allies over Greenland to threatening 100% tariffs on Canada, these really unpredictable policy moves, and you have to layer them on top of all the ongoing global conflicts. They create more than just headlines. They create a profound, deep uncertainty about the stability of the very currencies that global trade is built on. And this quote just captures the market's reaction perfectly. You've got experts directly linking all this geopolitical instability to the mad dash into gold, as investors, in the words of one strategist, are feeling unnerved and are desperately looking for a safe harbor to ride out the storm. But here's the thing, this isn't just about politics. It goes so much deeper, tapping into these economic anxieties about the very nature of money and debt itself. So, investors are piling into what's known as the debasement trade. And in simple terms, they're worried that governments facing just mountains of debt will choose to devalue their own fiat currencies, money that's only backed by a government promise, to make those debts cheaper to pay off. So they're buying gold to protect their own wealth from that very real possibility. And this fear, well, it's being fueled by this really potent mix of things. You've got massive government spending, a weakening US dollar that makes gold cheaper for foreign buyers, and this widespread expectation that the Federal Reserve is going to have to start cutting interest rates. All of this is pushing investors away from paper currency and into something real. And listen to this, it's not just a few individuals. This is a huge signal from the world's most powerful financial institutions. They are losing faith in traditional reserve assets, like the US dollar. When central banks themselves start moving away from the dollar at this kind of scale, it sends ripple effects out to everyone, impacting the value of our savings and the future cost of pretty much everything. But the story doesn't even end with gold. In fact, silver, which has rocketed past $100 an ounce, has its own unique and incredibly powerful drivers that make its story, well, maybe even more explosive. Okay, so while gold's value is almost entirely as a monetary asset, a safe haven, silver is living a double life. It's both an investment and an absolutely irreplaceable industrial metal. And what that means is that it's caught in this massive tug of war between investors who are rushing in and industries that desperately, desperately need it. And that industrial demand, it is just exploding. Over half of all silver is now consumed by industries. I mean, the green energy transition with solar panels and electric vehicles and the AI revolution with its massive data centers, these have become huge, price-insensitive consumers. They need silver, and frankly, they don't care what it costs. This soaring demand is hitting an absolute brick wall of supply constraints. Okay, so first, for 5 years in a row, we've had a structural deficit. We're simply using more silver than we're mining. Second, you can't just easily increase the supply because most of it is just a byproduct of other mining operations. And finally, to top it all off, China just restricted exports while investors are physically pulling bars off of exchanges, creating a really severe squeeze in the market. So, with prices flying this high, we have to ask the big question, right? Is this just a temporary speculative bubble? Or are we actually witnessing a permanent, fundamental shift in how the world values money itself? For investors who saw this coming, the impact has been absolutely staggering. Now, of course, returns like these are what fuel the arguments that this is a classic speculative bubble, completely detached from reality. But advocates for the rally, they argue that these numbers simply reflect the powerful new forces that we've been talking about. Ultimately, this isn't about one single factor. It really is a perfect storm, a confluence of three massive forces all hitting at the exact same time. A fragmenting world order, deep-seated fears about the future of currency, and a true physical supply crisis in a critical industrial metal. And together, they are forcing a fundamental repricing of hard assets. And this leaves us with one final, really provocative question. In a world where all the old certainties seem to be breaking down, what if this isn't a bubble? What if we're actually witnessing precious metals reclaiming their ancient role as the ultimate measure of value itself?